Hey all, welcome to ShareTreck. It's the 14th of July 2022 and this is the morning show. Yesterday was a very crazy day. Before the market opened, I was doing my videos, I was compiling everything, I had everything recorded, put it into the editing block, and then the CPI report comes out and CPI report looks bad, so I conclude that things are going to be bad. And then I go and confirm that with the futures, I go and confirm that with the pre-market action. Everything which was green before had turned deep red, and I said, okay, my conclusion matches with the market conclusion. Let's modify our entire video for the day. So I had to scrap a whole lot of the recordings and reposition the video and upload it so that it reaches you before 9:30 a.m. But to my surprise and horror, the market went the other direction. So we'll have to figure out what happened. We'll find out in a few days. But with that said, let's go and have a look at what's happening in the market action today. Are we going to be deceived again today? Let's check it out. Let's get started. Let's take a look at the headlines that are making the news today. And the very first headline is that there is a feeling in the market that interest rate hikes are going to only exacerbate going forward, and as a result of which all the futures are looking bearish and people are hunkering down with the fear of recession coming in, and the feeling that instead of a 75 basis point hike, there could be a 100 basis point hike is picking momentum in the market circles. The second thing that has happened is that today JP Morgan and Morgan Stanley both reported their Q2 earnings, and JP Morgan reported a 28% drop in their profits, and they attributed this to increased bad loan provisions, because when recession comes in and unemployment takes hold, people's ability to pay their dues becomes much more suspect. And there could be delinquencies in car loans, in credit card loans, and in mortgages. So all those things need to be provided for. And that's the reason why JP Morgan had a problem with reporting their profits. They were down 28%. Meanwhile, Morgan Stanley reported a 28% drop in their profits. And they attributed that to 55% decline in investment banking revenue. So overall, you can see that the banks, which we thought would probably give us a little bit of a boost, have also kind of stepped back. So this is again adding to the bearish sentiment in the market. And another bad news that we had, I think it's not a recent news, but Celsius has also filed for a bankruptcy. And this brings a bit of gloom on the crypto world and adds again to our bearish sentiment. And if we look at the Bank of Canada, yesterday they increased their interest rate by 1%. So this is going to be very difficult for many people to swallow, because when you raise the interest rate by 1%, it is heavy demand destruction happening. And in Canada, we have rents very high. And in the US also, if the Fed decides to go ahead with a 100 basis point hike, then it's going to impact the housing market, which is already precarious right now. So it's a very bearish outlook at this point of time. And I think we have to go ahead and look at what's happening with our futures as well as pre-market action in the indices in order to find out what the day could potentially hold in store for us. So I would like to go and have a look at Nasdaq and the indices now. Let's get started. I'm going to look at the futures first. And when I look at the futures, I'm going to look at Nasdaq. Nasdaq futures are, this is a 2-hour chart. I'm changing the strategy now. Instead of being looking at a longer time frame, I'm going to look at much more micro time frame. And 2 hours is what I have chosen. That's why the charts today are going to look different. And if I was to look at this 2-hour chart, I can see that we had this red line of resistance, which became a support when we crossed over it. We are coming back towards it. And pre-market, we are down 1.12% as far as Nasdaq is concerned. So there's a bearish outlook from the Nasdaq futures. And if we go into the indicators and look at US oil, we can see that US oil continues to drop. It has dropped below the level of support that we had at 95.08. So now that is a resistance. The next support happens to be at 91.70. And there is going to be persistent weaknesses in oil, as I mentioned earlier. And that's basically because of demand destruction due to rising interest rates. And this is going to continue, in my opinion. Next, let's look at Nasdaq, QQQ. And this chart again is a 2-hour candle each. And if you look at the formation out here, we have a line of support which shows a bullish channel within a bearish channel. If you look at this green line out here, I'm going to convert this into a red line to show that it's a resistance. And this green line of support. So this is the original bearish channel, this red line and this green line. Within the bearish channel, we started moving in a much more narrower range. So I added this another line of resistance to compress the bearish channel further. And we have been moving within that since 29th of April. And now what we have here is a minor bullish trend within this bear market. And we are coming to the close of the runway for this. Now, today, there are two possibilities that could happen. The first possibility, which I think is most likely, is going to be that we come down today all the way to this diagonal line of support, which is the green line, and then bounce back up again and hit the resistance on the top and then come back down again. And some decision would have to be made somewhere closest to 21st of July, whether we are going down totally or we are going up. So this is what is most logically possible for us today, in my opinion, given that the MACD is bearish and the momentum is falling down. But as you have seen in the market, anything can happen. So with that said, let's go and look at S&P 500. I have cleaned up most of the lines out here. So if we zoom out, each of these candles is again a 2-hour candle for S&P 500. And in S&P 500, what we have seen is that there seems to be some kind of barrier out here, which we are not able to cross. This is the kind of barrier that we are looking at here, which we are not able to cross. And if we venture closer to that, there's a good chance that we'll be pushed back down again. But at the same time, we have a support out here. So today, if we come down, which is most likely what's going to happen, then we are likely to come down and test the resistance out here, which is the first horizontal green line. And if we go further down, then we have another diagonal green line of support, which we'll have to test. And once that happens, we are likely to bounce back from there. And if we did cross this line of resistance here, then we have to contend with this other line of resistance, which we have not been able to go past. And that would mean that we'll come back down again. We will get some support here. Maybe we could go up, or we would probably come down further and then bounce back up again. So those are all the possibilities. But right now, looking at where our MACD is and where our momentum is, I think the possibility of going down up to this leg, this is something that I feel is most likely to happen. So S&P 500 pre-market is also looking bearish, as you can see here. And if we go to the Russell index, again, we have the same kind of a situation. There is some kind of a supply zone out here, which is going to depress the prices. I'm just going to draw this line roughly and bring it down here. So this is where we have been pushed down. This is again a line of resistance for us. Right now we are down 1.48% pre-market. So the chances for us to go up is very less, and the chances for us to come down is higher. And when I look at this chart here, I can say that we are most likely to come down, hit this diagonal line of support, which is the green line, and then go back up again. And then we might face a resistance out here and then come back down. This is what it seems to me is likely to happen, given the weak MACD and the weak momentum, and that pre-market we are down 1.48%. Let's look at the Dow Jones Industrial Average. This is what I'm very curious about, because Dow has not gone below 20% and it has not been in the bear market yet. So it will be interesting to see if we are able to break down below this line of support, which will be healthy for the market. And you can see Dow is down 1.45% pre-market, and we have weak MACD and we have weak momentum. So it's most likely that we are going to see a kind of support out here. We have to test this support. And if we break down from this support, we are supposed to come down. Pre-market, you can already see we are down here at 303, so which means that we have broken down from the supports, and we need to chart out a new support level that we can find. So for that, I would say that the next level of support that we have out here is likely to be somewhere out here. This is going to be the next support that we can expect to have. With the Dow Jones Industrial Average, what I would suggest is that we are still on a bullish phase within a bear market, because this diagonal red line is going to constrain us. Our next resistance happens to be 312.49. So we had this diagonal line of support which held up at least 3 or 4 times for us. But today, if you look at the pre-market action, we have already broken down below that. And we have had similar action before. If you look at this candle out here, this came down and then it went back up again. So it's possible that we may have a small wick out here, and then the body of the candle may form above that. But looking at the MACD, looking at the bank results, and looking at how the interest rate hike is going to be much more pronounced than before, and the MACD being weak, and the momentum being weak, and the pre-market being negative, I think the most likely outcome today is that we are going to break down below this, and we're going to test the support at 301.49 and probably end the day out there. And we are still not into the 20% bearish market that I was looking for Dow Jones, so that we can signal the bottoming. Next, let us look at the VIX. VIX is going up today. It started up and it came down a bit, but given the bank results and other things, volatility is likely to be much higher. We should not forget the fact that the Russia-Ukraine conflict is still going on. China still has the COVID issue, and we have countries which are in the verge of bankruptcy and anarchy like Sri Lanka. So things are not looking overall good. So volatility is likely to be higher. Now, if we go to put call ratio, you can see that put call has gone into neutral to bearish kind of a number, 1.04. So it's likely to go further up today. In my opinion, it's going to be a bearish market. And if you look at XLY by XLP, you can see that I have this diagonal line of resistance out here. I'm going to mark this red so that it can show that it's resistance. So we have been following along this diagonal line of resistance. And today, pre-market, we are at 1.98. We are looking a bit positive. But overall, what this chart tells me is that progressively the market is getting more and more risk averse. And that's the reason why the movement into more of defensives is higher than the movement into riskier stocks like Genomics and technology. And that's the reason why I think Genomics is going to have a struggle getting back value. But some good companies like VERV are most likely to have positive outlook. Even CRISPR would have positive outlook because they are all very, very close to monetizing as compared to the other companies in the genomic sector. So that's how I would interpret this chart for us. If you look at the US dollar index, more funds are flowing into the US dollar index, which means it's bearish for the overall market. So here we are with our genomics index, and you can see in the watch list, VERV is at the very top. It was the biggest gainer yesterday, and you can see VERV has suddenly moved out of the bearishness and it has gone into a bullish channel, in my opinion. And we have a very steep bullish channel, which is usually how they start, and then they moderate over a period of time. So ideally, I would like the bullish channel to track this way, where we have multiple points of contact and we are somewhere in a 45-degree angle, which is much more sustainable. We have a first line of support out here at 20.82, and pre-market, we are already down 6.60%. There is going to be a little bit of jitters and people are going to do some amount of profit booking. But I'm thinking that when the market opens, there's a good chance that we would test this support at 20.82 and we would probably move back up again or end the day around that place. This support should hold for us because VERV is in a good shape. And then if we were to look at Editas, it's up 12.16%. And pre-market, it's down 1.99. It's showing a bit of bearish trend. But 16.14 was the next level of support that we were hoping would hold. And we are seeing that it's already pre-market, it's down 1.99% and it's below that level of support. So the next level of support for us is 13.14. Beam was up 5.12%. and yesterday, and it went above our line of resistance at 53.43. So I'm going to mark that as a support. Pre-market, there are no trades, but given that Beam has been overbought on the momentum and RSI chart, I would say that there's going to be a bit of moderation, and keeping with the overall sentiment, we are likely to test this support, which is at 53.43, and potentially break down below it. That's the most likely aspect for Beam, except for the fact that its base editing seems to be the flavor of the season, and its partnership with VERV, that's going to give a little bit of support. So it'll be very interesting to see whether 53.43 continues to perform the role of a support for Beam towards the end of the day. CRISPR Therapeutics is up 2.09%, and just like at one point of time we saw Vertex having multiple parallel bull channels, that's most likely outcome for CRISPR. The overall bias is bullish. We may probably give up some gains today, and we are already below this 79.51, which is the last resistance that we had. So I'm not changing that, because pre-market we are down 1.86% and we are at 79.20, but we still have this bullish channel of support out here, and that's what I'm going to bank on. IDNA was up 1.82% yesterday. It's on a bullish channel, so I'm going to draw a bullish channel out here, and this is the channel on which it is, and I'm thinking that over a period of time this is going to become a 45-degree angle, because this steep channel is not sustainable. And pre-market there are no trades yet, but we are slowly starting to see genomic companies and genomic indices going into a bullish phase, albeit within a bearish market context. Bluebird was up 1.74% yesterday, and again, if you look at the channel out here, you can see that there is a bearish channel on the smaller time frame. These are all one-day candles out here. So you can see that right from 15th of June, we have been having a bullish channel going on. And I'm hoping that this bullish channel does hold for us today. Pre-market, we are down 1.71% to 5.18. And at the end of the day, we'll find out whether this bullish channel continues to hold. It has got multiple points of contact, so I'm feeling comfortable that it should. NTLA. Intelia is also forming some kind of a bullish channel out here. If I can show this to you in this way, there is some kind of a bullish channel out here, and pre-market we are down 1.70%, but still this bullish channel along with this line of support at 60.88 is likely to sustain Intelia. IMTX is definitely in a bullish channel. If I was to draw this line here, we can see that this was the first bullish channel, and now this is the second bullish channel. So it's varying degrees. It's gone into 45 degrees, more sustainable. Pre-market, there are no trades. So I'm thinking that IMTX is going to continue having this line of support out here, which will sustain it going forward. Illumina was down 3.62% yesterday, and it has fallen below our line of support, which was at 180.79. I'm going to mark that into as a resistance, and we are falling further as far as Illumina is concerned. And the MACD is looking bearish. It's tending towards the signal line, and the momentum is also down significantly. Let us look at news. The news yesterday is that Illumina loses case against EU antitrust review of Grail deal. I don't think this is going to be a significant factor. The market is overreacting because Grail is still going to be held as a separate company without being integrated with Illumina. We should remember Illumina had spun off Grail in the first place, and it's now trying to get it back in. So we'll have to wait for what happens with the EU decision, but I think it's a knee-jerk reaction at this point of time against Illumina. Their original business case is still intact, in my opinion, so we got to bounce back up again. That should happen sooner rather than later. We have the earnings coming up on 1st of August. Potentially that could be a catalyst for us to move back, or if a press release comes from the management emphasizing their original business case, then we should see a move up for Illumina. With that, I'd like to bring this video to an end. I think our channel has been sitting at 575 subscribers for a while now. So I'm probably doing something wrong. I'm probably not doing something better. Or probably we have come to a plateau where it's all the same old, same old, same old. We need to spice things up a little bit. Our segment yesterday, the small video I put yesterday with news roundup, got good viewership. So that's a positive news. So I'm going to look at some ideas to rejuvenate this channel and make it much better. I'm inviting your comments. Please put your comments below here. and let me know what I can do to improve this channel. I'm also contemplating that this evening around market close, I would do a live session just half an hour before market close. So I would expect some of you to be there to give me company. I don't want to be streaming to 0 viewers. So don't let me hanging in there. Please come and join me for the live session at around 4 o'clock. Maybe that is something that you would be interested in going forward. We'll see the market close and I'll give you my comments on what is happening. You can give your feedback. At this point of time, the OBS integration doesn't allow for live chat for me. So I could only see your chat, but I can't chat back to you. So I'll be replying to you on the screen and we'll have an interaction out there. So somewhere around 3:30, you should watch for my live stream to get started. With that said, I'd like to end this video here. I hope you have a great day at the market, even though the outlook is bearish. And with that, bye for now. I'll catch you at the live session.